Thailand's sustainable finance push is accelerating with the new ESG standards and rising activity from major lenders like Siam Commercial Bank signaling strong momentum. Joining us is Nikki Kemp from SGFC to unpack what this means. Welcome, Nikki. Let's begin with how Thailand is positioning itself as a regional ESG leader. Can you take us through what's happening?
Thailand now has a national sustainable finance taxonomy. Sector-level transition guidelines are under development, and banks are committing capital. And we can see this with Siam Commercial Bank's $180 billion sustainable finance mobilization in just 2.5 years, surpassing its target, as well as others in the market like Kazakhstan Bank and Krungsri, each doubling their 2030 targets. So this is still a target. To 500 billion and 250 billion respectively. Collectively, these are all clear signals of market readiness. ASEAN's pragmatic transition pathways are an economic imperative, and Thailand is exemplifying this, prioritizing decarbonisation strategies to meet its own economic realities in manufacturing resilience, energy transformation, logistics efficiency and supply chain upgrading. All of these areas are moving from ambition to implementation. And what's emerging is an ecosystem approach with policy clarity, financial innovation, and capability building. And these position Thailand as one of ASEAN's forward-moving sustainable finance markets.
So what impact do these ESG initiatives have on investor confidence?
It's all about the investors and making sure that the capital flows, and investor confidence grows in ESG with clear definitions, credible transition plans, and transparent data. And Thailand is making really good progress across all three of these elements. Thailand's taxonomy, launched in 2023, largely aligns with the ASEAN level frameworks, and it gives investors a common language to assess how green projects are. And that's across 6 focus sectors: energy, transport, manufacturing, construction, water and waste, and agriculture. The Thai taxonomy is really applicable across the whole economy. Banks are using for structuring sustainability-linked and transition-focused products with very clear measurable outcomes. Corporates to develop transition plans. Insurers are certainly building green insurance product and investments. And importantly, regulators in determining what are going to be the most effective incentives and market support. So a very wide use of the taxonomy across the market. Regulatory clarity reduces ambiguity, and it also reduces the hesitancy to address climate-related risks because there's more certainty. So the whole economy is really learning a new language and new ways to do green business.
Any challenges we should prepare for, especially for those that could slow Thailand's sustainable finance momentum?
One is one that we hear all the time about data quality and consistency. And this is a problem not for Thailand alone. This is across ASEAN. In fact, probably you could say across most of Asia. As many emerging markets, ESG data is often inconsistent, and especially amongst SMEs, where it's very difficult to extract or for SMEs to even compile that data. But the key is not to be seeking perfect data. Well, certainly not immediately. Moving forward on the basis that, do I have enough? Is the data fit for purpose so that I can use it to measure progress meaningfully and ensure that what I'm doing is truly green? In efforts to improve data availability, we're also collaborating with various organizations to establish a data hub for green finance in Asia. And in typically regional pragmatic approach, the data hub is demand-led, compiling and analyzing data to meet investors' needs. The second that I wanted to talk about is hard-to-abate sectors. Now, as defined, they're hard to abate. So one of the important things that SGFC is doing at the moment is to continue to produce research papers that help unlock an understanding of the challenges and the opportunities in transition finance. So transition finance being the transition from high emissions to low emissions or zero emissions ultimately. One of the recent papers actually uses some comprehensive data in one of the region's countries that has quite good data, which is China, to investigate if companies are greening their businesses means that they get cheaper money, cheaper capital, lower costs of debt. And there is actually a positive correlation there, especially for high emissions brown sectors. So if we can use that research and transfer the findings into Thailand and other countries in the region, I think this will be incredibly helpful in helping in providing economic incentive, real financial incentive to transition hard to abate sectors. The third is skills. It's really an important area that certainly we are focused on at SGFC to develop education programs. One of those was an introduction level massive open online course, a MOOC, which we had translated into various different languages, including Thai, and we had incredible take-up in Thailand. One of the areas that is absolutely needed in skills and readiness is ensuring that C-suite and senior level government and policymakers have a strategic understanding of climate and sustainable finance. This is another area we are indeed focusing on.
Thank you so much for your time today, Nikki. Looking forward to having you back on the program.
It's been my pleasure.
Once again, that was Nikki Kemp, Executive Director of the Singapore Green Finance Center. For more news, visit esgbusiness.com.